The following is a presentation of TFNN. The Global Market Pulse. With your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Not having the noise that we had Friday night. The party is not continued past the weekend, right, Michael? That was a harrowing experience trying to run a show with the festive activities right outside on the main street here. So, okay, so enough about that. And we have a chance to talk about the Nikkei and the yen pretty quickly here because I'm sure you guys have not been living in a cave today. It's been a big news actually here in Asia, which is where I'm located in case you didn't know that. Recession, the word recession is probably in order. They've been using it. I think by definition that's probably okay to use. And therefore we've had the Nikkei pull back about 3%. And if you've been watching the show, we've been talking about the Nikkei kind of on the rise by default being priced in yen. But now you've got a kind of a disconnect going on, or at least temporarily. The facts are out and the Nikkei is adjusting itself based on pure economic conditions, non-relative to the wicked bounce, as they say in Boston, that it got on just the pure devaluation of the yen. Can I use wicked? I guess I can. So here's the yen. I just kind of briefly showed the Nikkei. The yen is still sitting, looking to me as if it wants to stay on the launching pad here and move higher. I was thinking 115 was a decent target. We kind of reached it and kind of backed off for about a day. And now we've got this new profile that happened last week. And, we're sitting right above profiles. We talked about, hey, this is your new stop thing going on because we had that kind of classic, if you pull the boxes out, we've got that classic kind of flag there. And then the ramp up and retest, not one to go lower. And that inflection point is pretty strong. So, at least for right now, the people who've been playing the game, and I'm going to pull up the Nikkei for just a brief second here again. Yeah, Terry, I hear you. But I think that listening to Terry in the den, he said something very true there, in almost I'm assuming a sarcastic little way there, which is I'm all on board with. The Nikkei got that. Again, like we just talked about, that devaluation of the yen type move up because, it's priced in yen and all that. But as we look at this, now not only do you have a disconnect in the fundamental information coming out that you have to pay attention to as a fundamental trader or a technical trader or whatever, now you've got something that some people are going to have to get out of that kind of arbitrage trade, if you will. And this may get a little more wide. And I haven't been looking at this. I didn't do a ton of homework to try to create a spread based on – and when you create spreads, the way I used to always do it was just look at pure market value. Look at monetary, one side, like you're trading. We used to – long time ago – not a long time ago, back in Chicago, upstairs, when the floor was kind of going away. This is a great example of this, in my opinion. When the floor was kind of going away and the transition of people coming off the floor back in, I guess it started to some degree in the late 90s, kind of finished up with the bond and the Treasury pit being pretty much a ghost town for the most part right now, which is kind of the last bastion of what I would call the old days. But when that transition was happening, not only were there pure arbitrage trades that were kind of cool because you had the pit and the electronics and, if you could kind of develop a way to, have a guy in the pit, you could have screens, all kinds of things down there and, somebody upstairs literally, sitting on the trigger, with voice communications, headsets. There was just I don't know how any other way to put it but free money. But during that same time period, we used to do a trade where we used to try to balance an equation, and it's pretty simple in the purity of it, but we used to put the S&Ps on one side of the equal sign and the Dow and the NASDAQ on the other side. So it was S&Ps equals Dow plus NASDAQ. Okay, and what we used to do was we'd say 100 S&Ps equals, and this equation kind of moved around a little bit, but we'd say something like, and I'm just pulling this out of my butt right now, but 100 S&Ps equals 83 NASDAQ plus whatever, 21 Dow. And those multipliers times the instruments back then, you try to monetarily equal out that. So it's not a spread, and it's not an intra-market spread. It's kind of an inter-market spread, if you will. And as we balance that equation, we'd look at that expand and contract. We try to adjust the multipliers every once in a while to try to bring it back in. We historically look, and if you've ever looked at that, you can actually easily pair that up. I think these days on like an e-signal or TradeStation or probably Interactive Brokers or whatever. You look at it historically, because a lot of guys will trade the S&Ps versus the NASDAQ in a spread. You can get into some massive trouble doing that so-called spread. And I've seen people just get taken out in body bags with this. Oh, no, it can't spread out any farther. Spreads out farther. They add to it. Spreads out farther. They add to it. Then you got to get out. And that's usually the day it turns. But that kind of S&Ps equals NASDAQ plus Dow trade was a little less harrowing experience, really, and we could always kind of like play around with the multipliers and kind of, bring that back into some kind of sanity. And you'd have to kind of factor in dividends when they were getting announced, because as we, tried to rebalance that equation all the time to bring it in, you had to actually do that trade with quite a bit of money, and when things kind of went your way, every once in a while, in a big way, you could just clean up. I mean, I don't know how any other way to put it. I don't know what somebody's posting a link in a den about something, but this particular. I guess I went off on that tangent because this particular trade with the Nikkei yen now, some people are going to have to start getting out of that particular relationship, because even if the yen continues to get devalued, now, should the Nikkei continue to climb based on the default attitude towards the weakening of the yen? I think that relationship now has been kind of crushed, at least in the interim, because you're going to have to, have some disconnects with that trade, and you're going to have some people exiting, and you're going to have people scratching their heads and wondering, oh God, the shoe's off the foot, and I'm going to have to reevaluate this. So this may actually get a little worse. And I don't think the yen climbing or the yen getting devalued right now is really going to help the Nikkei situation. I think, the Nikkei should have pulled back more with those type of numbers coming out. But, so, this is a little bit different situation now. Just wanted to kind of put that out there so you guys could understand that. I'm assuming WX risk is probably some of the things concerning that three-way arbitrage intermarket spread. I'll look at that on the break. How about that? All right. So as we've talked about the yen a lot, that was kind of the flavor of the day here. I want to also look at gold really quick. Eric's going to come on. We're going to talk a little bit about some fundamental things and stocks that are related to that. But let's take a look at gold. Friday, after. Let's see when this started, if we can get some data here. Okay, so Friday, as I was speaking, and that's, after I was speaking, after the show, we obviously had a massive move up. And this is kind of the end result of that. So we closed above profiles. And I talked about the only way I'd feel good about going long gold again. And, you guys who are kind of sitting there letting it compress and gathering some contracts and putting stops below 1140. Hey, that's a way to trade this, and we talked about that. Kind of stops need to be below 1140 if you're going to try to trade bounces down there. Never really got that low. I think 46 was the low. But see how this happened? I just wanted to point this out. We closed above, a little bit of education here. We came back and retested today, and that low was 81, and that inflection point is 80.4. So we got, I'm just going to call that touched. I mean, in the volatile gold market as it stands the past 48 trading hours, I'm going to call that satisfied. And that's kind of what I always really, sometimes these things will close above and just keep running. And you're like, but when you get these pullbacks into these inflection points, I keep saying this over and over again, and I hope you guys aren't bored with it, but it really does provide just a really clear-cut black and white situation where you can put stops below. And by the way, if a gentleman's watching the show today that sent me an email, I think it was last week, I had everything teed up to send you back an email, and I'd love for you to send it back to me again because, I get a lot of emails, but this one particular email, my Outlook blew up and I lost it. So if you could send that back, I'd really like to answer your question. It was about buying a certain ETF, I believe. So I apologize for that. But gold with the gold made me think of it because I think it was a gold ETF. What do we do now? So now Logan has given you the telltale, hey, look what happened and see how great it was. And so what do we do now? So we've got a new inflection point, 88 up here on gold. Short term, I'm going to kind of, if you're kind of a gold bug and you want to see this go higher, and I'm kind of a gold bug myself. I like the way this happened. We broke out. We came back and retested. This is a simple trade to me now. It's put stops below here. Let this thing breathe. If I get stopped out, I get stopped out. Dims the brakes, and that's kind of the way I'm looking at it. Got to look at silver because silver really didn't cooperate as well as gold. We got to the inflection point, never closed above, saw some action this morning, came off. So, not as a lofty experience with silver as gold without question. But, again, I just got to see this thing get above 1640 and close above 1640 to really start feeling good about it. And as you can see, we came off that inflection point, reached a low of 1525. That inflection point is 26. So, that's pretty cool that happened. Similar to gold, but came right off the inflection point, reached the other side in one day, which is really weird. But, again, I like these levels. They're provided in the scanner, as I'm showing you right now. We're going to talk a little bit about that, but you get these way ahead of time. So we'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. I think we've got Eric Courtney on the line with us. Hey, Eric, are you there?
Good morning. Good morning, John. Yes, I am.
The mayor of Wall Street is back with us. You there?
I'm the mayor of what's raining up here today on Wall Street. So, yeah. Can you hear me? Do you want me to? I don't know if this mic, the visual is any good. I should turn that off, I think.
Yeah, there's a little bit of an echo.
Oh, it is?
Yeah,
okay.
you're fine.
Right,
you're
good.
fine. You're fine. Hey, Eric, what's on your mind today? What's going on? We talked a lot this weekend. How's things going on your side of the fence up there?
Oh, a couple of things going on. I think that, we've seen, of course, the Japanese situation is, I think we're in the later innings of, this world falling apart. But yet, needless to say, there's a lot of things that could go wrong. I did a lot of work on the weekend about the innovation of technology. And there's a building out in California, in Sunnyvale, right in the middle of Apple and Google and all those places, And they call it the Weird City. And in that building, they have all the crazy things that they're inventing and what doesn't work and what does work and what doesn't work and what does work. And the thing that I've been working on is this, you want to hear a couple of words together? Decentralized autonomy. which is the big word for Bitcoin and for the cloud and for how to put everything together. And it was really very, very interesting in that technology is moving ahead at such a rapid speed. It's like high-frequency trading.
Gotcha.
In terms of the real things for us human beings, biology is not moving ahead very fast. The whole thing in terms of, all of the biotechs and all of the stuff that's going on is great, but research for, like, there's one guy that has a new product that he's trying to get it through. Basically, they insert it in you, and it's an insulin little thing. It's a little pouch. And when you need insulin, it's like an ice cube. It'll melt a little bit. And when you don't need it, it won't melt. Well, this is a blockbuster-type drug. Blockbusters have not been around much. We're getting a lot of odds and ends. We're getting a lot of add-ons. Oh, sure, we have hepatitis and Gilead and all those other big things. But what I'm seeing is that there's a real slowdown out there in the drug technology. So it's kind of an interesting, observation to see on both sides of the fence. What's happening. What I wanted to talk about today, though, was more about that. I've been listening to you talking about scanner, and the scanner and the applications.
Right.
I remember on your show the 15th of September when you had Juan on, and you said the NASDAQ is out of line and the bond is out of line, and you went very negative, and, you caught that move on the downside, and then you turned around and got the reversal on the upside. And there are not too many people that have done that. When I had a 2-year training program at Merrill Lynch, and I became a stockbroker near the United Nations building, and I found out readily within about a year and a half, I knew nothing. Even all the training, all the education, I don't know. I didn't know what the hell was going on. I had no idea. So I decided to join the Lionel Eady, at that time was their economic subsidiary, and I joined that. And I finally started learning a little bit about what makes the world tick, and they ended up putting me in a hedge fund. So I ended up running a small growth cap hedge fund, which is a very different running of a portfolio than a large cap, much different. There were very few people at the time who had a good handle on small caps. And what I wanted to do in a couple of segments, maybe we do this week, I wanted to go after you about some questions, because I remember what it was like to run a hedge fund and how the application of scanner today would, in those days we had slide rulers. I bought a slide ruler over the weekend. I swear to God, I bought a slide ruler.
That was a big joke at NC State when I was there. Calculators had obviously come out when I was in school, but the joke was you ask a guy from NC State what's 2 times 2, and he pulls out the slide rule and says 3.999. Everybody used the slide rule back then. I used to laugh every time I heard it.
Well, these were the slide ruler days. This was the 1970s, okay?
Wow.
And we had a fund that became a home run fund. And you know how I did it? I'd call the reporters for the New York Times and the Mirror and the Journal American and stuff, and I'd give them ideas. Like I'd tell them, look, there's a company that makes a chair that folds back. It's called Lazy Boy Chair, and it's a stock. And
I'll tell you what, we're going to go to break. Can you hang around? Because I'd like to cover a couple of things with you. Yeah. Okay, cool.
All right.
Folks,
cool.
We'll be right back as soon as we can.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. We've got Eric Courtney from up in New York with us. Eric, are you still there?
Yes, I am. We were talking. You want me to? You have something you want to just jump into right now?
Actually, yeah. I mean, a couple of guys were kind of long some TLT in the den, and I've obviously been talking about the best trade on the books. I thought was trying to trade the bounce in the Treasuries, seeing that. And I've got the Treasury chart up right now, the 10-year in particular. We've rallied about a full handle from that lower limit here around 126.02 downstairs, where we kind of gathered ourselves on a new profile last week. And, we've gotten up to, into the 127 neighborhood from 126 neighborhood. And that was still, really the 10-year, in my opinion, and 30-year showing their hand, not wanting to go down, and we can use these levels that the scanner actually gives us to orient stops and targets around based on the S&P's kind of sitting on the highs, continuing to go higher, and the 10-year not wanting to go any lower. And I just needed to kind of bring that out to some folks and actually show them on the scanner what that's kind of all about really quick. Here's the 10-year. Now you see greens across the board except for the 60-minute, which is always going to be a little volatile. But those inflection points, and these inflection points on the 10-year in particular are really, they're decimalized, if you will. They're not 30 seconds. So you got to kind of look at it that way. So the 126, I think it was 08, and the 126.02 that kind of neighborhood that we've tried to leverage against from the long side, that was, that's a decent situation, reached some targets above, and now what do we do? So what do we do is we've got the 127 neighborhood is actually a daily and 240 wanting to stay above. So, to me, I'd like to continue to buy this. Even though we haven't, Eric, on the scanner itself, and I'm going to pull this back up in the den, I'm looking at our market breadth statistics. We haven't had that long-term indication by our dials here for breadth to go negative. We have, the market's not open yet this morning. We are going to have some short-term numbers change here, but the 60-minute and the 240 are starting to show some cracks. They haven't shown a lot of cracks in a long time, but the daily and weekly are pretty, they're still relatively strong. And until I see those starting to move in a different direction, namely the daily first, usually, I'm just going to call this noise on the S&Ps, and therefore, they could continue to go higher. I mean, I don't see any major cracks in this yet, even though we have kind of gone back into the 2025 area overnight. The 10-year really, it's almost moving forward now, even without the catalyst, moving north without the catalyst of the S&Ps pulling back any form of significance. I mean, the all-time highs on these S&Ps, Eric, I mean, I'm not, this is not brain surgery. I'm just picking out the number on the chart is 2043. We're trading 2031. I mean, I wouldn't call this a pullback in any form of a pullback. The 10-year just wants to move north. So I just wanted to get that out. So
one of the things I think go ahead.
Well, I mean, the scanner puts all those inflection points on the grid for you, and the market breadth itself is kind of causing me to still lean towards, we don't have, in my opinion yet, based on the breadth still being relatively positive, we don't have yet that confirmation that this thing will tell you that, this pullback really, should be sold. I mean, if you can call this a pullback, I mean, by definition with this breadth like it is on the long term, we're still looking to buy support levels until this changes. And that's just been the case time and time again while using this and looking at historical back studies back into 2003. So go ahead. Sorry to interrupt you.
No, your analysis of the interest rate side is critical to everything that's done on the stock side.
Right.
I was just saying before that, one of the ways I used to we run a hedge fund, I'd call the reporters, I'd give them a story about Bandag. Hey, they retread tires. You got to look at this. Well, you know what? I turned the paper the next morning, and there'd be a big article about Bandag. All right? I remember when reporters, I knew a reporter came in one day and said, there's a company called Murray, Ohio Manufacturing. They make lawnmowers and this and that, and I just bought a couple thousand shares. I said, oh, good. I said, I hope you do all right. The next day, the guy had an article about Murray, Ohio Manufacturing in the Herd in the Street column. I'm not going to mention names because, some of these guys are dead, so it wouldn't matter. But, I mean, those were the days. I mean, you want to run a mutual fund or you want to run, money. You just get a couple of reporters on your side, But,
right.
but the interest rate scenario, what I saw then, running the hedge, it was a mutual fund, actually. It was a small cap mutual fund. We did very well. And guys came up with names, and if they had had a scanner to be able to look at the various sectors they wanted to be involved in, if they were able to then take a look, like you just went over the interest rate scenario, which is critical to the whole scenario of stocks. Like oil is critical to the interest rates. Now, I listened to a guy over the weekend who I thought had a very good point about oil. Do you know 95, 100, 105, 106 was way too damn high for too long? That was a way higher price than we should have had. They kept it up there, and now we're coming down to reality. So everyone is shocked. Oh, my God, oil is 75. It was 100. What are we going to go to, $20 a barrel? No. It's a natural pullback of something that was too high in the 100 area for too long. Don't worry about oil, okay? Oil is not going to become something that's going to, throw a wrench in this whole scenario. But you're so right on the fact that if you were a manager right now, John, there's two things you look at. One, how you get paid. Number one, you get paid on your performance. And two, you get paid on your selections. And you're constantly looking for something new. If you're running a portfolio of a bunch of stocks, you would customize your PAS scanner with those stocks. Am I right?
Right, yep.
You'd have them. Then you'd have your profiles of all of those stocks to see where you could do some. I mean, guys get bored sitting there watching this thing. They want to do some trading where you want to lighten up in this particular arena or stock, or you want to add to it. Right? You'd have that on your scanner. You'd have the background.
Well, I mean, basically,
but the words, what to get in and out of, right?
Yeah, basically,
you're running a portfolio. How do you see your scanner application?
Well, what guys do, like in the Bloomberg environment, you know, we have something out there that people can type in their own instruments, and we do a cross translation to kind of get in our database, and it's kind of a long story actually, but you know, the web scanner allows you to, you know, the S&P 500 and the NASDAQ 100. We can put the Russell 2000 in there, but didn't have a lot of requests for that. And the market breadth on the Russell 2000, I'm looking forward to actually doing it at some point, because the more stocks you have when you're analyzing breadth, the better off you are. But to answer your question, you know, we started this for people on the Bloomberg scene, and you know, again, their biggest complaint was, man, I love your stuff. We, you know, saw you speak in Shanghai, whatever. And, you know, how do I actually use this to analyze the entire basket of stocks that I got to pay attention to on a daily basis? And how do I know where I'm at relative to your stuff? I can't sit there and, you know, drag stocks over into a chart format. I'm going to miss things. I'm going to miss trades. And the Excel, using Excel with our stuff, it actually almost blows it up, because you have to bring in a lot of data, a lot of historical data. And, you know, what we did is kind of take it off the local machine for those folks, which is what we've done for the retail guys. We've taken it off of your desktop. And a lot of times, you know, I hate to jump around, but a lot of times when you're using the trade stations or e-signals of the world, you basically have a limited universe that you can even analyze and crunch numbers on, because for starters, you know, the e-signals of the world and trade stations of the world, they won't let you have that many symbols. And also your local machine is doing so many math calculations that, you know, you're going to bog down, and you know, then you're going to have serious issues trying to trade and look at all these things and actually be alerted to them. So what we did is we took it off the, you know, the institutional guy's desk, put it onto our databases, give them a chance to search and find, to create custom portfolios, whatever, where they can look at their entire universe that they live in and see when things are changing. Now, we've got an alert system for them, and we're putting it into the web scanner also to kind of notify you of things that are changing on certain individual instruments. But for right now, and I've got gold up right now. Somebody asked me to put this back up, and I'll discuss gold in just a second. But, you know, as I look at this on the screen right now, I'm going to select none. I'm going to select the S&P 500. You know, the biggest secondary thought that we get from the institutional guys, which I think is, you know, it kind of drills down into everybody trying to manage their own trading business at home. And I'm a real big fan of spreading the risk out. You know, trading one instrument is not what I think anyone should do. Trading at home, it's, you know, you just got all your eggs in one basket all the time. But that's my opinion. But what this does, it allows you to find trading opportunities also that you might have missed. And, you know, when you look back at the end of the day and you kind of surf through a zillion charts at 12 o'clock at night, and, you know, you're like, Jesus, God, why didn't I see that? I wish I'd have known about it. So this kind of real time allows you, and I'm just kind of looking at analog devices, ADI, I used to trade the heck out of that stock a long time ago. But, it's got 2 inflection points lining up on 2 different strong time frames, and I'm not even doing any filtering right now. It's just something I'm noticing. I want to go to that, but if I want to do some drill down filtering on these things, it kind of puts stuff right in front of me, and I'm seeing a lot of, just glancing at this, I'm seeing a lot of tops and bottoms on our long-term inflection points, and what does that mean to me? That means ultimately, and I'm just doing eyeballing here on the S&P 500, remember how the breadth is actually created. The breadth is a relative look at stocks above, below, or within their profiles. And when I see a lot of tops and bottoms, just seeing those things in general, not seeing a lot of yellows, because when I see yellows, that means that new boxes are going to shift around. All right, and I can do a filter for that. But I'm seeing inflection points. I'm seeing price sitting right at long-term inflection points on quite a few instruments, and that means that we could have these numbers change pretty soon, because the internals really that produce this math percentage, if you will, are going to cause individually as they sum up for these numbers to change, and that's how it works. So, I'd rather kind of wait for confirmation to see some long-term numbers convert over, and then kind of cause our breadth.
That's fine. Yeah, the evolution of. Go ahead.
Go ahead.
I put things kind of, so that I could understand them. And I remember the jobs I've had. I've been involved in pension management. I've been involved in the placement of pension assets. I've been involved in overview of hedge funds and mutual funds. I've been involved in a lot of different sort of career spots. And what I'm seeing in the scanner, beside obvious, clearly the beauty of it with the trader, but I see a tremendous application of this for the institutional money manager, the advisor, the mutual fund, the guy who's sitting in the chair upstairs wanting to know what's going on in the market and why. And the time. You can walk into your office at 9:15, and what you're able to do in the morning here, 20 minutes or so, is give me what used to take us hours to try to figure, and then we weren't sure we were in the right,
where, Eric, case in point,
and we were looking at here, you've got everything, and then you can drill it down.
Right. Case in point, I'm looking at our daily time frame, and I'm looking at the S&P 500, and I'm actually asking the scanner to show me instruments that are actually trying to form a new box. And that means we've got a yellow cell, and we've got a lot of instruments that are trying to form a new box. And that means trying to form a new profile. And if I drill down into the institutional version of this, basically I don't even, it's a lot of numbers. It's percentages left and right. It's for the guy sitting there kind of wanting to kind of show me the meat kind of version of it. It's got a lot of extra bells and whistles, but if I drill down into that version, it will give me these percentages, and it's a relatively high percentage I'm noticing here on the dailies. And if I drill down into the other time frames, which I will after this break we're getting ready to have, can you stay on for the last 5 minutes, because I'd like to actually talk about that with you.
Yeah.
Cool.
I want to talk about benchmarks, and I want to talk about a few other things that I think are critical for the larger money manager as well as the trader. There's not a question that they all fit in the same boat. I'll be here.
Okay, cool. Thanks, Eric. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. When you first learn something in life, you have the most questions as you begin to apply that knowledge, which is why Steve Rhodes came up with the idea for his 7-week trading program. It all begins Saturday, November 22nd, when Steve Rhodes will host a live 3-hour morning workshop where he'll teach his attendees the precise methodology he uses when placing trades. You'll then receive 6 weekly updates each Monday morning discussing the possible alerts currently setting up in the market. Steve will then bring everyone back together for a final 3-hour live workshop Friday, January 9th, where he'll discuss the methodology that went into each of the 6 weekly updates, making sure that you're confident in applying what you've learned so that you can begin navigating the market on your own. You can sign up right now for this entire 7-week trading program with Steve Rhodes for a one-time payment of only $395. If you're a Mastering Probability subscriber, then you can save an extra $100 off that price. For all the details, visit the front page of TFNN.com right now.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi, guys. Welcome back to the show. Eric, are you still with us?
Yes, John, I'm here.
Cool. Yeah, what I wanted to show really quick before we start talking about this is was showing this is kind of the other side of the coin. This is the kind of the admin version of this, which just puts a lot out there. And, we're still breadth positive here just to show you that up until this updates every 60 seconds too. But as you can see, new box trying to appear above, almost 7%. 7% of the stocks in the S&Ps are trying to form a new profile up top. And that means by tomorrow, or maybe even today, we might start having some different action when it comes to those dials crossing over. So hasn't happened yet. Anything can happen, and like we talked about, I'd rather have the confirmation of actually seeing the breadth change to negative before we start thinking about that it's time to lay off the long gas pedal. But again, it's just another piece of the puzzle that this particular little product provides, I think. And here's gold. Somebody asked me to do that. At the end, it's a pretty easy situation to me. Stops below 1180 on gold, based on your appetite for risk, and that's what that is. Eric, did you have anything else you wanted to throw in there before we got about 2.5 minutes left?
All right, two topics very quickly. One, benchmark is critical to anybody managing any kind of portfolio, including their own. But of course, benchmarks for hedge funds, mutual funds, pension managers, you name it, you name it. You've got the benchmark combination here because you can look at all the major indices, you can look at all the various things that you want to throw up, and then of course you got your pricing of your portfolio, and you can measure it not only minute to minute, day to day, week to week, month to month, but you've got a tremendous benchmark. And most importantly, and I used to sit in meetings with the boards of directors over these money managers and the portfolios, and they were really had a tough time with paper trails as to why they did what they did, as to what the hell, why did you sell Lazy Boy? Why did you jump out of that sector of biotechs and move over into, tires? Why did you do? These are the questions these guys have to answer. They have to live with it.
Right.
What you have here in the scanner is you've got a paper trail that goes not only minute to minute, but can go month to quarter to whatever, that you're able to say, if you're a manager, listen, I'm following, certain technical sides. I also have, good fundamental. I can show you on September 15th why I decided that I think I better sell and lighten up on the NASDAQ because of the indicators and the metrics and the changing that I had from a service that I use. Now that, to me, John, look, I always look at, if I'm selling somebody, and I was a big producer, and I used to sell SAC, Stephen A. Cohen, you're long short funds. He had one guy, a team, sitting on drugs. One guy's job was to be long, one guy's job was to be short. I mean, with your profiles and your boxes and the changing, I mean, I'm not even going to talk to you about it, going after him, selling it to him because he'd want to own it. But what a value.
Believe it or not, folks, we did seriously think about approaching a couple of those SACs of the world and just kind of putting it in their hands. And that's why I think, I'm not trying to put a sales job on everybody, but that's why I think this particular scanner, you are in a good spot to have access to this, and I hope you will get some great use out of it.
Yeah, conversations like this will evolve into how they use it for a wide range of people. We are the slide ruler of the 21st century.
I love it. Thanks for coming on today, Eric. It's been a pleasure.
Okay, thanks.
Okay, guys, we'll pick it back up again tomorrow. Stay tuned for the Trader's Edge with Steve Rhodes.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.